Okay, has everything on there? Obviously, this Fridays will change, and I'll send that out shortly. It'll be updated. This is the textbook, which will be included if, yeah, most people have the Laker bundle, so you wouldn't have to worry about that. Yeah, you can look at the objectives. Oh, grades for the class. All the handouts and stuff. We're gonna do one of the handouts today. They're worth 20% of your grade, and the exams are 80%. So whatever, if you get in all of the handouts and all the exams, that's the 100% of the grade. And each one of those, whatever you get for average handouts, multiply that by 20%. Whatever you get for the average exams, multiply by 80%. Okay. Assignments usually due when we get it assigned. You can turn them in any time. I don't have that in there. Why don't I have that in? I'll put that in there. You can always turn in late work. There's no penalty to it. You can always turn it in, but it won't become part of your grade, obviously, until you do turn it in. So if something goes past a due date, and this is mostly just kind of keep people up to date on what on sectioning off the course, that it just won't be in your grade until you turn it in. So your grade will look bad until you turn it in if it's past the due date, but it will not affect your overall grade if you turn it in. And once you do turn it in, your grade will jump back up. There's no penalty for it. Okay, chapters 1 and 2, which we're going to go over today. And I probably won't send out the exam till next week just to get everybody on board. But the exam after this is the first one here will be pretty easy. We really don't get into the kind of the heart of the stuff until we get into chapters 4 and 5. Chapter 6 and 7 we go together. These are on transactions. International taxation. And on this chapter 10, 11, and 12, we'll do a little bit of this stuff. I know they have a whole thing on sustainability reporting because it's kind of a big topic for everything now. But anyway, so this is the class. My vision of it, just so you know, is that it will be, I'm thinking we can get it in 10 weeks. The material out. And if it takes you all semester to get the stuff in, that's fine. But that I'm thinking that making this kind of like a 10-week, kind of a condensed course in the accounting 337. Now, just to let you know, I'm no longer teaching 337 on Thursday. Somebody else is. So it's not going to be the same as their class. So if you have somebody in their class, they're not going to be having the same, they're not going to be doing the same things that we're doing. They took the 337 away from me pretty late, and I didn't want to try to get the other teacher to take the independent studies, just is on top of it. So anyway, it just makes it easier just me teaching. And it's not that this class is not as hard as, say, a lot of the other 300 level classes. Okay, any questions on that? Let me see. Yep. Just one more time. And as far as turning work in, oops, not that. There we go. Okay, let's go to 337 and turning stuff in. Oops. Okay, so turning stuff in, you can, everything will be turned in on this all assignments and exams area. And for instance, here's the first one. This will be the handout for this week. It's not going to be due on 1/26. Wait. Yeah, it's next Friday. Yeah, we do next Friday. You got a week to turn in. So anyway, so this will be what's due, and you just click on that, and you can submit it. Upload create a submission, upload a file. Most people do upload a file, but anyway, turn it in. And you can do it in any format you want. If you want to, um, if you want to print out the handout and do it in the handout, that's fine. You know, handwritten. If you want to do it directly into the handout, that's what I usually do. You can do it that way. Excuse me. If you want to do a notebook paper, that's fine too. So if you print it out or do it on notebook paper, you can either scan it or just take pictures. And you can take, you know, if there's 10 pages, you can take pictures of all 10 pages and submit them. The submittals are unlimited. So you can, you know, what do you say, 10 pictures, you can take 10 pictures and send them in. Now, there is something you cannot turn in, and that's these two. Zip files and page files. Zip files are Windows, and page files are the same thing, but they're for Apple computers. And a lot of times, if you're studying, especially pictures, sometimes it tries to automatically put them into zip files or page files. The problem is that Blackboard can't read those. And they show up as a weird document that keeps trying to load. So don't turn them in, don't turn these in. Again, if you take pictures, just send all 10 pictures or however many pictures it takes. That's fine. But these files are not, you can't put in zip files or page files. Okay. I had something to my tongue. I forgot what I was going to say. Oh, and also, if you need to turn in something twice, you're absolutely allowed to do that. The only thing is on exams, you don't have well, you have unlimited time to enter the exams until I grade them. Once the grade's in, you can't send them anymore. But the other, as far as the other homework is concerned, let's say you turn something in and it was the wrong one, or you turned in the wrong file or whatever it is, you don't need to contact me. Just submit it again. You can put in as many. It's unlimited submittals, so you can put in 5 of them. It doesn't matter. And when I go through the grading, I generally go to the last one because that's usually the one people want me to see. So, you know, don't worry about if I'm going to pick the right one. The last one that's submitted is usually where I go to. If that isn't it, then I go back and look through the other ones. But I can't think of a time where it wasn't the best one, you know, the correct one. Anyway, so you can always resubmit stuff. You don't need to do anything else with it. Okay, that's probably enough of the syllabus stuff. Save that. And let's go to the problems for today. These are, the first thing I'm going to do are just the financial statements, because that's what we're going to be translating stuff later on. But just to get back in the swing of making the financial statements and how we're going to kind of do with them. So anyway, we're going to start with the basic financial statements, and just to get it kind of reacquainted with it. Okay, so let's do these. Do something here. Okay, so these are the accounts we have, and we're going to start out with our income statement. So income statement is just money coming in versus money going out. So let's see, we have revenues are coming in. Oops. And what's going out are going to be the expenses. So this is coming in. Oops. And this is money going out. And I know this is it's something you already had a million times, but so wages are going out and utilities are going out. Okay. And that will give us our net income. So what comes in versus what goes out, and whatever's left over is going to be our net income. And I should be able to do this in my head, but being Friday, I'm using a calculator. $10,250. So this will be our net income. Go over to retained earnings. We start out with our beginning retained earnings. Oops. Which was 2,500. And retained earnings is just kind of like the owner's piggy bank. They put money into the piggy bank. So, for instance, now they made this net income. We're going to put we're not going to do that. We're going to put this net income in the piggy bank. And the owners. So there's 12,500 to the piggy bank. They added another 10,250 into the piggy bank, but then the owners took out 1,000. So this gives our ending retained earnings. $21,750. So this is our ending retained earnings. Let's make that green, and I'll show you why in a second. So this is our piggy bank, the owner's piggy bank. They put 10,250 in the piggy bank. They took out another 1,000. So here's what's left in the piggy bank. And by the way, this is the most money they can take out of the piggy bank too. This is the maximum number of dividends. Okay. So let's see here. I'm going to cheat. I'm going to copy this down to the next page. Ah, what did I do here? Something wrong. Come on. Oh, I see what's wrong. Wait a minute. Oh, brother. Okay, I get it. I know what's wrong with it. Okay, I got to put it underneath here. This is all one big spreadsheet, apparently. Yeah. Okay. I'm going to copy this down below. There we go. Okay. So assets, anything with value. Okay, so we have cash has a value. $5,000. I'm going to get rid of those two. Accounts receivable has a value. And equipment has a value. I think that's it. Okay, so total assets are those together. Hey, I don't even need a calculator, 25,000. Okay, coming on to liabilities. Liabilities are anything that you owe somebody else. And in this case, it's an accounts payable. Let's make that turquoise. So you owe, or we owe 12,050, excuse me, 1,250. Okay, our equity section. We have the common stock. So that's what the owners gave us, $2,000 probably years ago. And they gave us cash, we gave them stock, the ownership of the company. And so that is 2,000. And then the tricky one. Oh, I took out my retained earnings, the highlight, the green highlight. Ending retained earnings. And again, this is the ending retained earnings, not the beginning. Okay, so this is 23,000. 750. All right, so total assets. Okay, and that should equal our total liabilities plus our owner's equity. So 1280, and it does 25,000. Okay. All right, let's go ahead and do the second one. And I'll do the second one without the, well, oh, we got a little bit different stuff. Oh, well, you know how to do this. Cost of goods sold goes on the income statement. We'll do that one. Okay. Income statement starts out the same. We'll have the revenues. $41,400. Cost of goods sold. So cost of goods sold are the cost. It's not dollars leaving; it's inventory leaving. So cost of goods sold. That looks terrible. Okay, so cost of goods sold is it's not dollars leaving; it's inventory leaving. It's sort of like this. If I had this, let's say that I paid $5 for this and I'm selling it for $8. Okay, when I sell it for $8, now I didn't actually make $8. I made $8 minus the cost, which would have been $5. So I actually made $3. So I bought this for $5. I sold it for $8. That way, I made $3. But the cost of the goods would be subtracted because this is leaving. Whoever bought it is taking it, and so we're not actually giving up cash, but we're giving up inventory. Okay. Cost of goods sold, we got utilities expense. Anything that's an expense is going out. Repair expense. $7,360. And this will give us our net income. Okay. Oops. Let's highlight that. All right. Ow. $24,840. Guys, you may want to check that just to make sure. Look at the calculations again. 41. That is not right.
Be like 11,960, right?
Yeah, I didn't subtract out the cost of goods sold. Okay, so minus. Was it 11,960 that we said?
Yeah.
Okay, sorry about that. Okay, so we have our beginning retained earnings. So this is what's in the piggy bank. 23,000. They got another 11,960. The owners took out 1840. Okay. $33,120. And yeah, I think that's right. Okay. So what's our retained earnings? I'm going to copy all this down. Okay. So let's see, assets. We have cash, accounts receivable, inventory. All right. Let's see. I think that's it for that. $51,520. Okay, let's go to liabilities. We have two of them now: accounts payable and mortgage payable. All right, accounts payable is 2,300. And mortgage payable is 11,500. 13,800. Okay. These are done. These are done. Common stock. Up here. And we need our ending retained earnings. About 47,720.
Should be 37, no?
Oh yeah. Oopsie daisy. That's not going to balance out, is it? Oh yeah, yeah. Well, hold on. Yeah. Well, okay. So 13,800. 51,000 by 20. That does work out. Okay, so let's do. Leave this. Okay, so this is the balance sheet. So one of the things you if this was in a foreign currency, like this was Canadian, how much would the above cash be worth in US dollars? Okay, so we have cash of 8,000. And if each one of those, each Canadian dollar is worth 80 cents, we'll just multiply it by the 80 cents, and this will tell us how much cash they have in US dollars. 6,400? 6,400.
Yeah.
So this would be This would be 6,400 US dollars. How much would be owed on the liabilities? Oops. Capitals. Oops. Liabilities were 13,800 times 80 cents. And that looks like a Mr. Calculator problem. $11,040. So this would be our liability that we would have for on the books with a Canadian company. If this was a company that we own, for instance. Okay, I sent out in the email. I didn't put it in Blackboard yet. I will. The exchange rates handout. Where am I at? Here we go. Okay, so translating foreign transactions, translating individual foreign transactions to US dollars. Okay, so one of the things we need to do is to translate currencies. And the third handout. Did I send you this, Faz?
I got it, yeah. So.
All right, so the one is to say, okay, well, from US dollars to foreign currency. And so this one, euro's not a very fun one to look at because it was almost exactly the same as a dollar back then. But let's take the British pound. All right, so 1 US dollar is equal to 0.85 British pounds. Another way to say that is a British pound is worth how much in US dollars. It's worth $1.17-ish, something like that. Now, when we translate into US dollars, this is really the one that we're using. Because you take whatever currency they have. So for instance, if they had this in British pounds, we would take their British pounds and multiply it by $1.17, and so on and so forth. So whatever currency they're in, we want to get them into US dollars. So from foreign currency to US dollars. This is called the indirect. I'm not sure how they came up with direct or indirect, but the indirect one is the one that we use usually. They're easy enough to calculate. For instance, how do they come up with a 1.7? If you just take $1, and divide it. Oops. Try again. By we'll get something pretty close to 1.74. Oh, I've been doing this in the calculator. I've been in Excel. So 1 divided by that. Okay, so that's how we got that. That's how we get those two. Okay. Oh, it's off a little bit. It's off a little bit because of rounding. It doesn't matter too much. But anyway, so that's what it is. And here's the top 50 currencies around the world. You can take a look at that if you want. Okay. So foreign operations, the one thing we have to do is translate financial statements to GAAP and then translate the currencies. And so there are different accounting rules. And then once we get the accounting rules figured out, we put them in US, for US accounting rules. Then we have to go on to the foreign currencies like we just looked at here. So we're going to have those. So we'll then translate them. So there's actually translating international stuff is two different things. We had to translate them into US GAAP, US accounting rules, and then apply the foreign currency translation into US dollars. So there's actually two things going on there when you're looking at the transactions. Making sure it's in the US rules, and then also translating it into foreign currency. Okay. So we use the US's Accepted Accounting Principles made by the AICPA. The AICPA is just a club, but they make the accounting rules for the US. And our government, the Securities and Exchange Commission, says, here's this club that makes accounting rules. You have to follow them. And so the AICPA has no government, no official status in government at all. It's just a club. But the government says you got to use their rules for making your financial statements. So because of that, what they say is very important when it comes to accounting stuff. Okay, international standards. International standards are by far the most prevalent in the world. Oops, I don't do that. Over 170 countries have adopted or allowed the use of IFRS. The United States, you can put your financial statements using international standards. So if you don't want to use GAAP, US GAAP, it's possible. You don't need to. You can actually go on and make the financial statements using the international standards. Okay, convergence. Means crossing between barriers. So IFRS is not completely standardized. They allow for different things in different countries. Now, generally, they have kind of a core value of things, but they also allow for small differences between countries, and there's a good reason for that. It's very difficult to get. First of all, they do have different customs and laws and all that kind of stuff, so they have completely different systems, and a lot of times the system has to be kind of adapted to allow for that. And but more and more, it was either starting to be used by it. Okay. Problems caused by it. Preparation of consolidated financial statements. You got companies using different rules. Like we have, U.S. We have U.S. rules, and then we have international standards. Access to foreign capital markets. Sometimes it is difficult to get access to foreign financial markets if you're not using their standards. For a long time, international companies would use U.S. standards, even though they weren't operating in the United States, because when they would try to get money from banks, a lot of the banks were in the United States. If they wanted to get their stock listed, it's in the United States. They had to use U.S. standards because that was what was required in the United States. So sometimes you'd have almost like it's a currency problem, but almost like a language problem that that whatever you give them, if it was not in the U.S. standards, it was not looked at as being relevant information. Hard to compare, maybe by the different standards. Comparing, say, Ford with Daimler-Benz. One has U.S. standards, one has international standards. Lack of high quality accounting information. We'll talk a little bit about that later on. Okay, convergence. We're not going to go to all of these, but obviously the idea is to have more universal financial statements. We live in a multicultural, government agencies and all the stuff all over the world. It's a world market now. It's not just U.S. like we kind of thought about 1950s and 60s. If they talked about the market, they were talking about the U.S. market. We were in the U.S. and we really didn't pay too much attention. But now it really is a global thing. U.S. companies sell cars all over the world. Other countries sell cars all over the world, including the United States. It's a huge thing. So convergence is and we have converged quite a bit. It is a better thing. Okay, arguments against it. This is one that hangs up on the United States. We have a significant differences in existing standards, and we get to pounding on tables. They say no, it's this way. We say no, it's our way, whatever. And significant legal systems, tax systems. There's all kinds of things that get in the way of of what countries, what you need based on different countries. And there's also people that don't like changing the system. Why do we have to change to the U.S. system? Why does U.S. companies have to change to the international standards, that sort of thing? One of the big things, though, that, for instance, the legal system is probably the biggest difference between the United States and other countries. Our legal system is way out there compared to other ones. Other countries, they don't have these multi-million-dollar payouts. Someone slips and falls somewhere and they get $5 million or something. You don't get that in other countries. It's more like and I mean, they do have compensation for that kind of stuff, but it's kind of like it's almost like an accounting thing. They look up on the table and see how old the person was and all this stuff, and this is what they get paid out. You don't have these real flashy attorneys and stuff, they get really high payouts from juries and things like that. It's a much different system. United States has the wackiest legal system and one of the wackiest healthcare systems in the world. It came about for certain reasons, but there's a huge difference between our legal system and our healthcare system and other places in the world. So, you run into this in the accounting. A big thing for U.S. companies are retirement. For instance, when I worked at Navistar, which we built trucks, we had 11,000 people working in the company. We had 39,000 people who were retired. So we basically had more than 3 people retired for every 1 person still working at the company. The assets for the pension fund were larger than Navistar. So the pension fund was bigger than the company itself. You don't have that with international company. They have their, you pay into the government then pays out for retirees. It's a different kind of system than we have in the United States. Healthcare. Sometimes these companies say, okay, we're going to take care of your healthcare after you retire. Healthcare is massive. They have these massive liabilities due to healthcare. They don't have that in other countries. Their taxes are higher, but they also have this healthcare is included in it. So you have these really strange differences. In the United States, we just grew up this way, so we don't know any different. But other countries look at us and they kind of scratch their head like, why do they do it like that? They, like, for instance, healthcare. Why do companies pay the health insurance? So it's one of those things that they don't understand why we do it. And it kind of came about in a weird way in the United States. I don't know, I'm off topic a little bit, but in World War II, they couldn't raise the wages for employees. Before this, healthcare was never paid by employees. But in World War II, companies were competing to get employees. They just couldn't get enough employees to work in the factories. So they had these wage freezes. They couldn't offer people any more money, but they could offer them other stuff. So they started offering healthcare. And back then, healthcare was like nothing. They would have a couple doctors on staff, and if you had you went to work, and if your kids needed to go see the doctor, they go to the doctor on the site, and the doctor would give them prescriptions and all that kind of stuff, and that was it. I mean, it was a very low cost way of getting more people to work, and it just stayed that way for so many years, and now so we got a very, very different one. Okay, now universal acceptance of IFRS. International standards. The international standards have really gone quite a bit. And the thing you need to know about that is that they are what they call principle-based. They give a lot of leeway to judgment, a lot more than the United States standards. They have this principle-based right. United States standards have a right and wrong. This is the right way to do it. That's the wrong way to do it. And it's spelled out what's right and what's wrong. International standards they want you to be kind of reasonable in what you look at things, and they look at theoretical aspects of the problems. Not just, okay, here's what it is, here's the percentage of that. There's good and bad to both of them. I can tell you that right now the international standards are kind of going through a time where they're kind of wondering if they shouldn't make different rules, because there's been huge scandals in how people account for things, because they are given judgment. What's reasonable, and what's reasonable to some people is not reasonable to other people, and so you have these very different groups that are getting involved. One of the big things that we'll talk about later is in auditing, and where U.S. standards are absolute. You can't own any interest in the client. International standards are a little more loose. You can own interest in the client as long as it's not material. What's material? It's a judgment call. And they've had huge scandals in these things too. Accounts receivables, they've had huge scandals and all on them. And in some of the markets, it's getting a little bit like it used to be in the United States when we had Sarbanes-Oxley come out, and that people they couldn't trust they can't trust the financial statements. And so the international ones, well, I think overall it's good to have people who actually sit down and think about something rather than having yes or no. There's also a big problem if people that you can have problems with that because of it. Okay. It's very unlikely that the US standards are ever going to merge with the international standards. 10 years ago, I would have said they absolutely are. We're all going to have the same accounting system pretty soon. But yeah. So anyway, and so when you convert them, you convert into the, so it's up here, translate the financial statements, you're going to take them from international standards, put them in US standards. And then you have to also work on the translation of the currency in dollars. Okay. That's about enough for today. I won't send out the test. Hopefully we'll have more people next week. I'm going to send out to the other two. And actually, we may even have a fourth person kind of add to the group. So we'll see. But anyway, so I think I'll send out an email and I'll change it in Blackboard that next Thursday we'll start seeing 4 p.m. It'll be like an hour-ish. It's not going to be terribly long. And that should get in, will certainly be done in time for your 6 o'clock class. Try to get like at least an hour in between. All right. Any questions, Fez?
Just about the book. You just send an email about that later on.
Yeah, I gotta contact him. We've had a real problem, not just in this class, but in a lot of them, about people not being able to get to the ebook. There's the long story behind. Okay, I'll tell you the long story. The long story is all of our materials. I submitted all of mine on November 2nd, I think. They got lost. We re-entered them again in December. Some of them got lost. They re-entered some. Actually at that point, more of them got lost. Long story short, that if you look in like the history of it, I've had 4 materials entered for every class, and 4 materials taken out basically. And so we're trying to figure it out. It's kind of a big mess this semester for some reason, but hopefully it'll be fixed fairly soon. And you're not going to be required to have it. I'll actually just make out printouts of the book until we get it straightened out. So yeah, but hooky by like next Monday we should have it straightened out, and I'll check again and see why it's not hooking up there when we go through the kind of the steps there. So anyway, yeah, we're still working on it. I'd love to be able to tell you, hey, it's going to be fixed today, but it's actually out of my hands. So, and I thought it was fixed. This is literally like this is I think the 5th go around with it, and hopefully we'll get it all worked out. Wish I had a better answer for you.
I appreciate it though. But yeah, I mean, you have a good weekend. That's the only question I had.
Okay, and you can turn this handout in if you'd like at the I lost my screen. Here we go. If you want to, you could not that. Here, if you want to, you can just save this. Upload the file into this, and that's for today. So
got it. Okay.
All right.
All good.
All right. Well, I will see you next Thursday at 4. Okay.
Have a good one. Take care. Bye.